In case you're in the market for some growth and income stock suggestions, we've invited our growth and income stock strategist, Todd Bunton, here to outline a couple for us. You got kind of an interesting combination here. I'm not going to make any jokes about it. Royal Caribbean Cruise Line, RCL, the first company on your radar.
Yeah, pretty popular. They're the number 2 cruise ship operator in the world. Have about 40 vessels, really all across the globe. It's not just in the Caribbean, and actually its strength outside of the Caribbean, which drove a very solid fourth quarter beat on January 27th. They saw strength in Europe and Asia sailing. So good results there in spite of the negative PR for cruise ship industries right now. The cruise ship industry, they delivered solid top line growth, and they were able to deliver very solid bottom line growth too, because they've been managing expenses well. And management provided very bullish guidance for 2014, and that prompted a flurry of positive estimate revisions from analysts, sending it to a Zacks rank of 1, which is a strong buy rating. And if you look at the agreement and magnitude of consensus estimates, which are the 2 biggest factors of the Zacks rank, those both look terrific. Analysts unanimously raised their estimates, not only for 2014, but for 2015. And you can see the magnitude of the consensus estimates below. You can see that was pretty significant for both this year and next. That's why it sits at a Zacks rank of 1, which is in the top 5 of all the stocks that we rank here at Zacks. And based on those consensus estimates, analysts expect about 37% earnings per share growth this year and 21% growth next year. And that's, again, going to come from probably low to mid-single digit revenue growth, but also through operating expense leverage. These companies are obviously have a high degree of fixed expenses, and if you can get more people on board, then you can cover those fixed expenses and really drive solid bottom line growth. So that's kind of the story going on here on the earnings side. They also pay a solid dividend that yields 2.1%. Now, as you can imagine, during the Great Recession, they actually suspended their dividend, but they reinstated it back in 2011, and we actually saw a solid, very aggressive dividend raise last summer. So currently, 2.1% yield to go along with that good growth. And all that at a pretty reasonable price. They trade about 14 times forward earnings. The industry median's right at 20 times, so it is a significant discount to that. It's going to be an interesting play in 2014. All
right, and then also on your radar is Baxter International, BAX, the ticker. Not trying to insinuate that you'd get sick on a cruise or anything, but...
and then need their products, right.
But just putting it out there.
Yeah, Baxter International, diversified medical products company. They operate in 2 primary segments. They have bioscience, and then they have medical products. And both of those segments did very well in the fourth quarter, which the company reported on January 23rd. Solid beat. They delivered a 1-cent beat over the Zacks consensus estimate. They saw 5% sales growth, excluding an acquisition that they did. Solid growth in both segments there. About 60% of their revenues come from overseas. So they saw good strength internationally and here in North America. And if you look, management also provided solid guidance for 2014. So
yeah, that's something that's been missing from a lot of companies this earnings season.
It has, yeah, and that's why you've seen estimate revisions come down overall for the S&P 500. So you want to focus on companies that not only deliver solid beats, but are providing strong guidance. And Baxter is one of them, along with Royal Caribbean. And that prompted analysts to revise their estimates higher for both 2014 and 2015. Sent it to a Zacks rank of 2, which is a buy rating. And based on consensus estimates, where they currently stand, analysts are looking for about 10% earnings growth this year, 7% growth next year. This is more of a stable, operator than Royal Caribbean, which is obviously very tied to the economy. So this is more of a stable growth kind of company, but very shareholder friendly too. They pay a dividend that yields 2.9%. I brought with me the history of their dividend payments over the last 10 years, and you can see since 2003, the company's increased their dividend at a compound annual growth rate of 13%. So very good shareholder-friendly management here. I'd expect that dividend to continue growing in the future as the company continues to grow its free cash flow and its earnings per share. So good income to go along with solid growth, and all at a very reasonable price. They trade at just 13 times forward earnings. Historically, they've been at 15 times, so there's a little bit of value to go along with the growth and income here. Also a good play here in 2014, I think.
No agreement magnitude talk here.
It looks pretty. It's not as pretty as Royal Caribbean. I thought their dividend chart looked better, so I brought that with me.
All right, I'm just checking. I just have to check. Do you own either of these?
I do not.
I have to check on that too. In the meantime, if you want to check out other stock picks and stock picking strategies, then you need to get over to our website, Zacks.com, because right off the home page is where you can link to new and changing, all the time changing stock pick ideas. So get on over there and check it out if you're not there watching this video right now. With Todd, I'm Terry Ruffalo.